Welcome to the Norris Group Real Estate Podcast, a show committed to bringing you insights from thought leaders shaping the real estate industry. In each episode, we'll dive into conversations with industry experts and local insiders, all aimed at helping you thrive in an ever-changing real estate market, continuing the legacy that Bruce Norris created, sharing valuable knowledge, and empowering you on your real estate journey. Whether you're a seasoned pro or a newcomer, this is your go-to source for insider tips, market trends, and success strategies. Here's your host, Craig Evans.
Welcome back to part 2 of our interview with Matt and Amanda, managing partners of Keystone CPA. Hope you enjoy. People who are in the game and experienced will know that, hey, tax strategies are something that I can use to build my wealth. Now, for newer investors, what are you guys doing to promote, like, hey, it's not just filing your taxes. This is a tool to build your wealth, especially if they're going to start young. Like, so what are you guys doing to promote the business?
Yeah, it's interesting because the best way we can do it is just to educate the public on it. We've written 2 books on tax strategies for real estate investors that helps the everyday person who wanted to read a book and learn about it themselves and understand there are things that could be done. We speak very frequently on live events and podcasts, and I have a social media account on Instagram where every day, we're teaching people the different things they could consider to save on taxes. But it's sort of an uphill battle a lot because this is a funny thing because we spoke at an event just a couple weeks ago on stage where we talked specifically about tax planning and how important it is. When we get off the stage, people grabbed us and said, "Hey, can you file my tax returns?" We said we did not talk about tax returns, right?
Get out of my
face. You
face.
missed the message.
And I think that most people always think like, gosh, I just need somebody better to file my tax returns. The reason I'm paying too much is because my CPA who's filing my returns is not doing all of the strategies. But really important for all of us to understand that there are no strategies when we talk about the past. The strategy and the word planning is always forward-looking. So if you're complaining that your tax person didn't help you for last year's taxes, it's you're not looking at it correctly. The question to ask yourself is, who is helping me to plan now to save taxes on 2026? That's what planning is about.
All right, so I'm gonna shift to the thing that we've alluded to a couple of times now is artificial intelligence. It's touching every part of our life, and so it's going to touch every segment now. A lot of investors are starting to use it to look at deals, analyze where to allocate funds, things like that. How much do you guys advocate them using AI for what, and what are you guys still like? Why should people still hire a CPA?
Mm-hmm. It's interesting. We use AI pretty heavily in our firm, from drafting emails, marketing, sales, and also on tax research. Well, a very important role that we have for our team is for all tax research we do using, and then for us, it's not ChatGPT. We have, paid AI specific to taxes because ChatGPT is terrible for that. It hallucinates and makes up fake information. But even for our team internally, we are required to take a step further. So for us, AI is step 1 of guiding us to where we should actually go to see case law as well as regulations and things like that. But it's not the end of the research. And I think for the average listener, it's fine to use AI, but that is not your CPA. AI's output is only as good as the information you give it. And specifically for taxes, because it is always changing, a lot of times what ChatGPT gives you is outdated information as well. So use it as a tool, but don't.
That's what I was going to say is like, do you guys recommend to people like say, hey, use AI to prepare you for our meeting where we're going to really dive into the strategies and planning. Do you guys recommend that for investors?
I typically tell people if you are a client, so all of our clients have access to us for consulting. I always tell people, because you've hired us, you should just ask us the questions. That way we give you the right answers. We do have clients who ask AI to prepare questions that they send us. Sometimes it's helpful. Sometimes it's kind of, AI stuff, right? Like, you ask me 20 questions, 10 of which are maybe 18 of which are not really relevant.
Yeah.
So we probably shouldn't talk about it, but we could if you want.
Yeah, I actually talked to a client this morning with this exact situation. So she's got a transaction coming up, and she admittedly doesn't understand the entire transaction. So she kind of, spit what she knew into AI, and it came back with 15 questions and categories, areas to ask us. And I got the email. I was like, well, this is pretty, this looks like it was written by a lawyer or something, right? But
This is robust.
she told me it was written by ChatGPT, because she's like, what questions do I need to ask? And so I think it's good from that perspective to help you kind of get a better understanding of what's going on, but certainly it's not the end all to be all. And some of those questions in her situation too weren't even applicable, but it definitely can help you wrap your hands around what's going on sometimes.
Have you seen people get in trouble because they rely too heavily on AI?
We have, one of the things that AI does fairly well is to kiss up to.
Oh, no, my AI thinks I'm the greatest thing that ever happened.
Yeah.
But you are, Joey.
And we have seen clients who have business ideas that they put into AI, and it kind of leads them down this path of like, this is just the most amazing. So part of our job is to gently discuss the holes that are within that business plan.
And I think don't assume that it's going to be correct and make it better every time. So we were a prime example. We were using it recently for a webinar, which helped with some of the marketing tweaks. And it was, how can we improve the click rate on this email? And it was strong. I mean, it was like adamant, like, here, this is what you should do. This is how you should reword the email. The click rate changed very minusculely. And I was like, okay, well, I want to go back to ChatGPT and like, hey, you were wrong.
You blew it.
I think specifically on the tax side, just, for everyone to know, again, it's okay to use ChatGPT, but you always have to verify. Sometimes, and we've experienced this in our firm, when we ask it a question, it'll give you very seemingly accurate citations of court cases down to the case number. And then we find out there's no such case, right? So what is this about? Say, oh, I'm sorry, that here's the right case number. And then it's like, oh, that's actually also not a case, So it's that kind of back and forth. So just verify that the case is actually a case, and then read the case. Does it actually mimic my situation enough where I can rely on it?
I actually spoke at the event for the first time on stage. And so
awesome.
my section was how AI is going to affect real estate. And one of the things that through all the books I've read, because of all the walking I've done, is I've just read a ton of books, and like you see my favorite book behind me. That's the AI Driven Leader. And so I'm actually going to shift my presentation to be the AI leveraged investor. And so it's just using it for what it's actually designed to do, to make you better, quicker decisions. But you have to stay the human in the room. And one of the things from one of the books that I read was, there's 4 things that you always do. Bring AI to the table. Assume that this AI that you're using is the worst AI that you're ever gonna have. The third one was, tell AI exactly what it is. Be my thought partner. Help me analyze this. And then the last one, and the biggest one we just talked about, is always be the human in the room. So that I love that. So now that we've gotten into a couple of those things, let's talk about more of investor level strategies, right? So that's the really helpful perspective, because ultimately technology can help investors, but stay informed. But strategy is the most important thing that you're going to bring to the table. So for someone who's buying their first rental property, what tax strategies should they be thinking about right away?
Someone buying their first rental property, we kind of mentioned entity structuring, right? Make sure you have the right entity, whether it's an LLC, partnership, single member LLC. For new investors, I think really important to make sure you take some time to understand the deductions you're able to take advantage of. For a lot of those folks, it's
What's the most commonly missed deductions?
oh, so many.
That comes.
Yeah, I think we're all pretty good about writing off mortgage interest and property taxes.
Yeah, I think most people,
On that.
they capture all that stuff that's tied to the properties, the interest, the property tax, the insurance. It's all those overhead costs of being an investor, being a business owner that a lot of people forget about. So believe it or not, dues and subscriptions, going to real estate conferences, travel expenses, meals is a big one that gets overlooked a lot. I think people don't realize that if you have a meal with somebody else and you're talking about business right before, during, or right after, that meal can become a tax deductible expense. And so I think things like that, home office expenses are a big one, car expenses, all those things that we're all spending money on already. It's just people don't realize that, hey, now I can transfer that from being a non-deductible personal expense into a legitimate business deduction because it is tied to my real estate investing, it's tied to my business, whatnot. So I think that's where people miss out a lot.
A lot of times investors, especially the ones that have followed us for 10, 20, 30 years, with Bruce and his following, investing hasn't been the same the whole time. So how important is that their tax strategy also evolved with their pivots in their careers?
Oh, for sure. As when you're a new investor versus when you're looking to scale, right? So we talked about, okay, first-time investor, understanding your write-offs, getting in the right structures. As you're looking to scale, then we're looking at tax-efficient ways to scale. So is it a 1031 exchange? If I no longer want to own this property, I 1031 and keep doing so, right? What we call dropping. What is it that we call 1031?
Drama swap?
No.
You call it something.
The 1031 until you pass away.
Oh, swap until you drop.
Swap until you drop. Yes.
Swap
There's
until you
something
drop.
about dropping and swapping. Swap until you drop, right? I'm going to keep scaling from a single family to multifamily, and then just keep doing it and pass it to my kids and grandkids with no tax. Or is it, if we're going to sell and we don't want a 1031, how do we offset the gain strategically through other strategies? Or do we do tax-free profit extraction or equity extraction to then take the, from this property to 3 more rental properties? So those are a little bit different when you're in the scaling phases. And of course, at the very end, when you're in the exit phases, it's more about generational planning. What do I want to do with my assets? Because we have clients who are like, you know what, I'm the one doing real estate. My spouse does not do anything at all. I would hate to leave my spouse with a bunch of real estate that she will have to handle by herself if I'm gone. Right?
If we don't want all the different burden.
Yeah, what are all the different strategies and considerations around that aspect of it?
And I think another way to look at it too is it depends on where you're at, whether you're scaler or not. It depends on where you're at in the journey. You might be at the point where I don't want to own a bunch of rental houses anymore. I want to be more hands off. And so it gets to a point where you're investing in syndications and things like that, other people's deals. And there's a different strategy involved in that. And how do we utilize that versus my own direct on real estate? So depending on where you're at in your journey and what your goals are is definitely going to dictate this tax strategy. But it certainly needs to be evolving as you move along in your journey.
That was one of the questions I was about to ask, is that at what point does it make sense for them to really get serious about cost segregation or restructuring their entities?
Yeah. Well, that differs from person to person, right? You could have a very young person in the beginning part of their journey with very high income and they buy a short-term rental. Well, we probably want to do cost segregation now because we want to wipe out the taxable income, right, from that source. You could have someone who owns a lot of rental properties and all of their income is already naturally offset by regular depreciation, in which case I probably just do regular depreciation if I don't need all that much in terms of losses currently.
You could have somebody that's on the tail end of their working years and they're naturally thinking, well, I don't need to continue investing in real estate. What's the benefit going to be? I'm not going to have my high W-2 income anymore. But those might be the prime years where we're utilizing real estate losses to do tax-free conversions of our retirement accounts, move that money from that tax-deferred bucket to the tax-free bucket without having to pay a lot of taxes. So definitely depends on where they're at in their journey, where they're at in their goals. But it's that's why we enjoy doing this, because it's fun. It's always something new.
And there's tax planning is different from person to person, because we've had this before where there's 2 partners that are like, well, I'm just going to pay you for planning because my partner is basically the same as me. we own the same partnership of rental properties. But I tell them, no, you're not the same. You have different goals. Your spouses have different goals. You have other different things going on outside of this joint partnership.
Your spouses have specific goals for you that you don't know about.
And they're different.
Yeah, and they're right.
They're absolutely right. Remember?
Yes, absolutely.
Absolutely. Now he's adding absolutely in front
He said that before.
Okay.
Yes.
Write that down.
What's your biggest success story, or what's the most you guys have ever been able to help people avoid in giving back to old Uncle Sam? What's one of your favorite stories?
Oh my goodness, there's so many. Because our clients are fairly heavy in real estate, just over the years, we have a lot of clients who make over 6 figures a year and pay no taxes. For us, that's fairly common, but again, because our clients are so heavily involved in real estate. Probably a more fun story might be one of our clients last year was the winner of the Beast Games. He won $10 million on the game show.
Oh, wow.
And it's been fun to help him strategize on different ways to offset the taxes on a windfall, kind of a one-time windfall like that through, entities,
get the whole
real estate. Yeah, it's funny because he was interviewed on a podcast and they said, hey, set aside $5 million for taxes, at a minimum. And so, so there's different things like that, a little bit outside of real estate that's unique. But
that's fun.
Real estate for us is the easy stuff.
For those that don't know, the Beast Games is from Mr. Beast. He's one of the biggest, if not the biggest, YouTuber out there, and he just has these really fun challenges where I've seen, hey, last person to take their hand off this car wins the car, and it's like literally days, going through all that. So it's pretty fun. Matt,
I think one that I thought of was we had it's a little bit on both sides of the spectrum. So we've learned in our experience that a lot of people are afraid of IRS audits, and they're always asking questions like, "Hey, is this going to get me audited?" But in reality, what we've seen a lot of times is people get audited for like the little stupid things. It's you forgot to report a W-2 on your tax return, you forgot to do this or that, some tax form 1099 is missing from your return. So we actually had a client get audited, a pretty big client get audited because the spouse had forgot about that part-time job that they had in the summertime. And while the IRS is there, it was like, well, this person has a lot of real estate. Maybe we should look at this. And so that was a learning perspective, right? But at the end of the day, the success story of it was that we helped him plan for this audit. We organized everything. And once the IRS got involved and saw that everything was pretty organized and detailed, they actually ended up closing the case really pretty quickly in our eyes. Yeah. And so, I'm pretty sure we screamed some expletives out loud at the office when we found out that the case was closed, because he did cost seg, he did this and that. Not that he was doing anything wrong, but there's something there that they could look at if they wanted to, right? But for them to get out of it with
all it takes, right?
Yeah, for somebody to get out of there with a no change audit was a huge win in that situation.
Yeah, this was one that, an audit like for that specific client is probably something that takes 5 years or more, just because of how many properties, entities, and, it could have been a very time intensive thing, even if we won the audit. So
they could have opened up partnerships they were involved in.
So I was very happy that they closed it so quickly because they said, everything you provided was amazing. I'm not going to waste my time.
There might have been a celebratory drink on a weekday at like 11 a.m. in the office, just possibly.
I think, what's your guys' under subject line that, Keystone CPA?
Oh, tax planning made easy.
Yeah, you should be like, we'll keep you out of jail. All right, I want to ask just a couple of fun questions. I played baseball for a long time. I still coach baseball. Matt, I know a lot of your what you do revolves around baseball. And one of the things that I had when I played at Rio Hondo Junior College before I went on to the next school, John Scolinos has a couple of viral kind of talks. One about the plate being 17 inches, for everybody, right? And you don't expand it. But the other one he had was the 8 lessons of life that baseball teaches you. What is the one thing that baseball has taught you or that you implement in your everyday life that maybe crosses into business?
I think something that baseball taught me early on is if you want to be successful, you got to put in the work. I mean, this is going to be the case for any sport, but baseball, as we know, especially, is those people that succeed 30% of the time are Hall of Famers, right? So you're going to fail more times than you succeed in baseball. And if you want to get better, you got to put in the work to get better. And so I think that's something that stays with me every day, is that, hey, if we want this to be a better operating office, we want this to be better, that we've got to work at it, right? So
Yeah, one of the things I tell my son and my kids is like, great hitters hit a lot. You know, they get a lot of hits, but because they hit a lot. Actually, I just thought of something else. Like, you guys are both parents. How early should parents be really talking about not just what they're learning in school, but real life applications, talking about economics and, you know, things like that? How early are you guys talking about, like, let's say some of these things that you guys are teaching, you know, the most experienced real estate investors? How much of that do you guys apply to your kids? Like, for me, it's as soon as they get any kind of money or anything, like, they're buying houses. Like, all my kids are all going to buy houses immediately. So what are you guys going to impart to your kids?
Well, and I think, you know, for us, teaching is sort of worked into everyday life, you know, not like just teachable moments all the time, right? We talk pretty frequently about work-related matters at home, and the kids are exposed to it. So in that, it's discussions about client issues, client opportunities, issues with our team member, you know, growth issues. And so for them, it's kind of peripherally, they're listening. Our older one, who's now 14, he will chime in and ask questions. Mason is, you know, he's 7, so he doesn't really understand too much of it. But yeah, I can definitely see our teenagers more interested. You know, he'll ask, like, why? What happened here? What happened to that team member? And I think for me, that's super helpful because I grew up in a family of entrepreneurs. My grandparents were entrepreneurs. My parents are entrepreneurs. And I've always been around that. And I think that's the kind of stuff that's really priceless, right? Just having them be around it and exposed to it. Not that there's any to-do or action items at the time, but that they understand that's what happens in the real world in business.
So you're turning everyday work experience to teachable moments for your kids.
Yeah. Or sometimes, when they get money, you know, we talk about investing it
or saving, investing. Yeah, absolutely. So Amanda,
but, you know, he is 14, so he talks kind of weird in a weird way, like all these teenagers do these days, and so I'm not always sure he's actually serious when he's asking the questions, or he's just trying to irritate me.
Are you guys bro?
Oh yeah.
Oh.
Well, not me, but
yeah, you don't even want to
bro, and it's giving.
Yeah, no, I'm dad. Thank you.
What's really interesting, I think, our 14-year-old has learned is that he's all about saving and investing. So all of his money goes to saving and investing. But when he wants something that is our money, like, because your parents, you have to pay for these things. You know, they're just clothes. I need them.
I'm hungry every 2 hours. You should be buying me food every 2 hours.
Yeah. So the difference is my money is mine and your money is mine.
So speaking about
is what he's learning.
Food, Amanda, one of the things in your bio is like you love looking for those holes in the wall. Now, I don't want to live in San Diego, but I love going down there. So what's your favorite spot to go eat in San Diego?
In San Diego? Oh my gosh. I have to think. I feel like we don't go to San Diego too much.
We did take the kids to, we were down there over in Christmas time, and we were celebrating our anniversary with our kids. And so we took them to Ruth Chris Steakhouse. And obviously Ruth Chris is very good.
Not a hole in the wall.
Not a hole in the wall, but
just to clarify, that's not a hole in the wall.
Trying to expose them to good, good, nice restaurant where you can't act like a weirdo, and you can't call the waiter bro, and that kind of thing.
So, Matt, the reason I'm at the Norris Group is because I spent so much time in the community with Aaron, and so volunteering and just built up a friendship. And here, so we've spent a lot of time giving back to the community and spending time with nonprofits. Now, you've Can you tell people about Animals for Armed Forces?
Yeah, so Animals for Armed Forces Foundation is a organization that we founded going on 13, 14 years ago. And the impetus of it was I used to actually volunteer at a local animal shelter. And so we were driving by, I think it was Veterans Day weekend. It was just kind of like my dad was in the Navy, my stepdad was in the Army. It was kind of like, and that'd be kind of cool to be able to provide an adoption event where the animals are free to adopt to military members or former military members. And so I took that idea to the animal shelter later that year, and they loved it. And so we subsequently formed this foundation where we put on basically sponsored pet adoption events where military members and their families can come down and adopt animals for free, and we cover the adoption fees. So going on 13, 14 years, we've had over 1,000 animals adopted by military families. So it's pretty cool.
That's amazing.
That was on TV.
I've been on TV a few times. I might be.
They let you on TV. I thought it was always Amanda. She's the face of the.
No, she doesn't want to get up early for those TV segments at 5:30 in the morning.
Yeah.
Well, that's awesome. Because we're helping not only animals, but we're also helping the veterans. I always grew up with dogs, but they were just kind of like there as like background noise growing up. But it wasn't until I married my wife that dogs truly are part of the family. And I like in my previous unmarried life, all the dogs were all outside, just like they ate whatever we would scraps. But now, like I've only had inside dogs, and it truly
now Joey's sleeping outside. Yeah,
yes,
I get it.
Yes, it's really cool that you found a way to help two different segments. So the last thing I'll say is, what's the one piece of advice that you would give real estate investors that are listening right now that they can still do before they file, or let's say to just start thinking about next year's tax planning?
Gosh, well, I think it's kind of more of the same, right? Before you file your tax returns or when you're filing, make sure to request or book a separate appointment to meet with your tax person to go over 2026 tax strategies. Especially if you feel like you're paying too much on last year's taxes. But definitely do it as a separate meeting. Most accountants are really busy trying to meet the March and April deadline. And if you try to squeeze it in, you try to save money and say, well, I'm already here, I was going to talk to you, you're not going to bill me separately, you're just not going to get the level of planning that is really impactful. Because for planning purposes, like for us, we have a whole framework that we do in terms of we look at the overall financial well-being of a specific person. That's their cash, their real estate, their stock portfolio, their retirement account, what they plan to do with their money and their kids, and holistically look at everything. And that's not going to be squeezed into a 10-minute conversation right before you sign on your tax returns.
Yeah, I would say just make tax planning and the idea of thinking about it all the time something that's not an afterthought. It's something more of a forethought that you do actually think about. We were talking to a client recently who loved the way he was thinking about it. And he was, okay, what worst case scenario? What's my tax going to be? And then let's devise a plan to bring that down to a number that I'm comfortable with. And I think that's what people forget about is they just live their life and taxes come April 15th. I pay it and I complain about it, and then we rinse and repeat next year, unfortunately. So make it a forefront on your thought process,
especially as tight margins can be in California. So that's very important
for sure.
So guys, thank you so much. The last thing I'll give you is the opportunity to tell people how people can reach out to you and hire Keystone CPA.
Yeah, I think the best way to find us is our website, which is KeystoneCPA.com. We have a lot of information on there, free resources. We talked about real estate professional. If you want more information, or hey, I don't know what that is. What is that? You can find a lot of information on our website and different services and how we can work together.
Yeah, if you want to know whether you might be overpaying in taxes, we do have a tax risk assessment. It's a free self-assessment. It takes 30 seconds. You can visit our website for that, and you'll get emailed your score on how you did. If you're looking for daily tax tips, I'm mostly found on social media on Instagram as Amanda Han CPA. And, our firm does tax planning as well as tax return filing. However, we don't just have clients come to us only for tax return filing. So we have capacity to help people for 2026 with planning and future tax return. But don't call us if you're just like, I need someone to file my taxes for last year.
And is it just California, or are you guys nationwide?
No, we have clients all over the country, so I can't say with any certainty that we cover all 50 states, but we do cover a lot of those.
Most of the states, probably. Maybe all 50.
Oh, guys, thank you so much. You guys are always so generous with everything, the Norris Group. I really appreciate it, and appreciate you guys jumping on with us today. So with that, we're going to sign off, everybody. Thank you so much for listening, and we'll link all the stuff in the show notes for you guys to make it easier to find Matt and Amanda. Thanks, guys.
For more information on hard money loans, trust deed investing, and upcoming events with the Norris Group, check out thenorrisgroup.com. For more information on passive investing through the DBL Capital Real Estate Investment Fund, please visit dblcapital.com.
The Norris Group originates and services loans in California and Florida under the California DRE license 01219911, Florida Mortgage Lender license 1577, and NMLS license 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the hard money tab.